5 years, and IndigoHomes is giving a 5-year payment plan, interest free. All right. But someone might not be thinking of 5 years. Probably they want to move into their house this year, and they don't have the money to do that. Or someone is looking at 5 years, and it's a very short time for them to pay for that house. So, George, I'd like to start with you to just take us to what is a mortgage, because we all hear mortgages and we run, we fear, something is, oh my God, the bank.
Yeah.
So, what is the mortgage? Just break that down for us.
Yeah, no, thanks, Anne. And I like where you're starting from, because in our part of the world, it's about the only place where people hear property prices and they think they should have the money locked up in their account to be able to buy, and that's what people like us offer. We offer mortgages. So basically, mortgages are long-term loans that we offer to individuals, households, for them to be able to buy properties from developers like yourself. Of course, in our part of the world also, and I'm taking it from the general sense, in our part of the world, people also like to take mortgages to build their own properties, or buy land. But the focus for this afternoon's conversation will be mortgage for the acquisition of properties. So you mentioned that you have some payment plans which are relatively shorter term. So I want to highlight the fact that mortgages are long term, and they are long term because you can take a mortgage for up to 20 years. Up to 20 years. So you hear IndigoHomes, Greenwich Park coming up, and you're wondering, I don't have the money. The solution is you get to take a mortgage for 20 years. We spread it for you, and within that 20-year period, you make monthly repayment. The way it works is you will typically have to come up with the deposits, and the deposit will be about 20 to 30% of the property price. And the bank providing the mortgage will typically pay the rest of the property. You understand? So we pay it, and then you in turn make monthly repayments to us over the 20-year period. Yeah. So that's basically how mortgage works.
That's interesting. So that means if I have my 20% now, but I don't know how I'm going to raise the 80%, I can actually come and tell you, George, I have my 20%, qualify me for a mortgage for 20 years because I don't want to strain my finances.
Absolutely.
And from then on, you're going to take over.
So to put it in simple terms, we would write a check for you to go pay the property to cover the 80%. You take the keys, you move it into the house.
So that means anyone looking at Greenwich Park today can actually, and they only have 20%. That's maybe about 600, 700,000 cedis. By end of the year, they can move into our phase one.
Yeah, absolutely. Absolutely.
Wow. Amazing.
Absolutely.
That's
Yeah. And I'm sure, my colleague Mavis is here. While we pick up the conversation, we would even, make it better for people joining us, because the partnership we have with Petra, for people to leverage their pensions actually makes it possible for you to take 100% mortgage. So it's even better.
Wow.
You don't even need your 20%. You don't need, yes, yes. And I'm sure maybe we'll go into it when we start, but it's basically making home ownership more accessible. You combine the mortgage, you combine your pensions, and you can actually unlock so much value and take 100% mortgage. You don't need to pay out 20%.
Yeah. I think I'm also learning. I don't knew it all, but I'm learning as well.
Exactly.
Yeah. And so, who qualifies for the mortgage? And why I'm asking this is, traditionally we know it's your basic. Is it just the employed who qualify for mortgage? And as I speak to this, I know quite a number of our listeners are in diaspora, and so they are asking, look, I do not work in Ghana, I don't even bank in Ghana, but I want a mortgage. So who qualifies for a mortgage?
So the simple answer is everyone. And I'm going to break it down. Everyone, because I know the myth out there is that you need to be a salaried worker or to be, in formal employment to be able to do it. Or even for some people, they think you need to be resident in Ghana. That is not true at all. Everyone. So one, if you're a salaried worker, both in Ghana or resident outside, you can't take a mortgage. Nothing stops you. And we've done countless mortgages for the people we call non-resident Ghanaians. So if you're a Ghanaian, you live in the UK, in the US, Canada, out there, and then you have some form of business or some form of employment that shows income, you can. So people in formal employment, live in Ghana, living outside, you can qualify for a mortgage. Secondly, for people who are not in formal employment but have one form of business or the other, can also qualify for a mortgage. And I need to stress this because, I mean, people always think, we are going to ask for pay slip, and no, that's not. Actually, some of the biggest transactions we've done, as a bank, has been to business owners and self-employed people. So yeah, the simple answer is everyone. Of course, because of the partnership on the pension-backed mortgage, what it is our colleagues who live, or our brothers and sisters who live in the diaspora, they do not have pensions, domiciled here. And so the only bit they cannot do is to leverage on pensions to take the 100%. But in the traditional version that I mentioned, where, they pay up 20% deposit and we fund, 80%, you live outside, you can do that. Yeah.
Interesting. And I'm not Ghanaian at all. I'm Nigerian, African American. I have no roots in Ghana.
Spot on.
Tell me.
Yes, spot on. Spot on because I missed that. Again, to my earlier answer, everyone because you can qualify. So we have what we call non-Ghanaian, non-resident mortgages. The bit of education is that there's a bit of legalities around it as far as title for our brothers and sisters who are not Ghanaians. That is the only thing. So typically, when you buy a property in Ghana, you can get up to about, say, 99 years as an individual. But the law says that for someone who is not Ghanaian, you get up to 50 years. That is the only thing that limits you. Besides that, we are more than happy to give you a mortgage.
Yeah. That's good to hear. And how do you qualify? Because I know, and I think at some point we will list down, you would help us list down
Go through
all the requirements, what I need to bring to the bank for you to start the application process. But when you're looking at someone's ability to qualify for a mortgage and a mortgage of a certain amount, how do you go about it?
Right. So the primary metric here is that you need to be earning some sort of income, right? So you're a salaried worker. At the end of the month, you get paid something. You are a business owner. You run your own business. At the end of the month, you get something from your business. So that is what we use to check, because you need to have the ability to pay back the mortgage or the loan that we have given to you. So the key thing which we check is you need to be earning some form of income, whether in formal employment, whether you have a business, you need to be able to. Now, the second thing is the ability for that income to qualify you for the property that you have. I see your beautiful development here, and trust you me, I would want the biggest of it, right? But my income might not necessarily qualify me for that. So when you go out there in the West, people start from the smallest units, the studio, and climb up. It works like that with mortgages as well. If your income cannot qualify you for a 3-bedroom, we check that, and then we can advise you and say, okay, IndigoHomes has a 2-bedroom that will qualify you for that, or maybe a 1-bedroom, and then you can take that. So to answer your question, the primary metric is income. You need a certain form of income. We need to establish or work out the property price, and if your income can qualify you for that property price, then you go. Yeah. Maybe the other thing that I would add as well would be, because I mentioned ability to repay, is age. Age is more of a secondary thing. And I say that because, so if you're in formal employment, then obviously you're going to go on retirement at a certain point. So if you live in Ghana, the retirement age is 60. If you live outside, say in the UK or in the US, I think they get a little above 60. So whatever jurisdiction that you find yourself in, we would normally use your retirement age, But if you're a business owner and the business is structured such that, it exists beyond you, that does not necessarily apply.
And maybe you have a list of the requirements that someone needs to have in order for you to submit the documents or the requirements to the bank for someone to qualify for the mortgage. If you can give us that list.
Right. So we start with an offer letter from the vendor, So in this case, IndigoHomes. So I know when people come to you and they show interest in your properties, you will typically give them, a letter offering the property. So we would, the very first thing that we'll look out for is the offer letter, right? So these are the formal documents. But I always, even before I get into the formal documents, let me say this. It's not your typical retail loan. So we like to handle it on relationship basis. So before I go into the list, if you don't have it, you can still start talking to us. We would tell you that, okay, you need an offer letter. Customers come to us as a first point of call. They go online, they check for the properties, they see your beautiful units at IndigoHomes, they come to you, and then they bring us the offer letter. So I'll run through the list, but it is not cast in stone. You can always start speaking to us. If you don't have it, we can guide you. So to go on the list, the first one will be the offer letter from the vendor. We need this. It's typically a letter stating that the developer is offering you a 1-bedroom, a 2-bedroom, a 3-bedroom property at a particular price. Now, when you bring that to us, we would ask you to bring your proof of address. We want to see where you live, proof of ID. In Ghana these days we talk about the Ghana card. If you don't live in Ghana, and your passport, that also qualifies as well. For our brothers and sisters who live outside, we would ask you to bring your credit reports. So for people in the diaspora, they are familiar with Equifax, Experian, or whatever credit reports. It's not that it doesn't apply for our brothers and sisters who live in Ghana, but in Ghana, we're able to pull the credit reports ourselves. Yeah, so we will generate that for you. You don't have to bring it, but based on what jurisdiction you're coming from, you bring a credit report. These credit reports will typically just give us a history of how you've performed on other loans that you've taken, in the country that you live in. And then the ultimate, which I mentioned, is proof of income. So if you're a salaried worker, we'll need your pay slips, to show how much you make every month, and the corresponding bank statement. Yeah, normally we would ask for 3 months, or it's typically 3 to 6 months. So your last 3 months, your most recent 3 months pay slip, corresponding bank statement. If you're not a salaried worker and you run your own business, then we would need the statements from the business. We need to assess and see how the business is going. And again, I highlight this because many times people come to us, they run their own business, and it's very normal in Ghana. It's not formalized and it's not structured, so we do a bit of education as well, inform and educate people on what they have to do to structure their business, open a bank account, make sure that your sale proceeds go in and all of that, so that you can also qualify. So these are the main items that you need to come to the bank with for us to be able to do a mortgage with you.
Such a long
Not at all, not at all, not at all.
And please remember, if you have any questions, we'll have a Q&A session at the end of this. So this is a conversation. So please type on the comment section if you're on social media platforms, and if you're on Zoom, just send a message. Nelson and Cobb are looking out for you. Yeah. I want us to do a practical example. Very practical. I want a 3-bedroom townhouse at Greenwich Park. It's been for about 2.8 million Ghana cedi, or $237,000.
Right.
It comes fitted with AC, it comes fitted with microwave, fridge. So I'm not thinking about the fixtures. I'm thinking of my beds, my curtains,
Nice.
which I already have.
Nice.
But I don't have the money, so I want to do a mortgage, and I want to say take a 15-year mortgage.
Right.
Just take me through, break
Okay.
it down for me. If I already have my 20% down payment, break down for me what I need to do or how much I need to pay for the 20 years for this house to be.
Absolutely. So, and I think one of the things I didn't mention earlier, and I'll use this question to highlight, is the fact that we do mortgages both in CD and foreign currency. So if you live in the US and because of your income you want to take a USD mortgage, that is fine. If you live in the UK, you want to take a pound mortgage, an euro mortgage, whichever, we do that. But I think for the ease of this conversation, I would run you through a CD mortgage and a dollar mortgage, right? So my exam question is: you have a 3-bedroom property, $237,000. Okay, so your deposit of $50,000 is about 20% deposit, right? So that is what you need. 50,000, and then you come to us. When you come to us, we assess you, and if you qualify, the outstanding price, out of your 50,000 is 187,000. So when we assess you and you qualify, we pay the 187,000 to Indigo, and then we spread the rest for you. If you decide to take a 15-year option, your monthly repayment is about $2,200. $2,200. That's your monthly repayment. So you're going to pay this for 15 years.
If you're looking at the CD equivalent.
Okay, if you're looking at the CD equivalent at the current rate, we can take the property price about 2.8 million. So your deposit should be around 600,000 CDs, right? And then the bank will do a loan for you for 2.2 million, right? Now with that, your monthly repayment is about 30,000 CDs.
30,000.
That is how much you pay for 15 years.
With that, I have a 3-bed house.
You take the house and you move in.
I move in.
You move in instantly.
Great.
So we pay and then you move in.
If I want to rent out this house, is it okay?
Absolutely.
The bank doesn't mind if I'm buying as a property to rent out.
Trust me, it's your property. You can do whatever you want with it. I mean, of course, let me add that, and I'm sure it will come up in the questions. People would even ask, do I need collateral to be able to take this?
Yes.
The good thing is, no, you don't need any collateral. It is the property you're buying that is your collateral. And so to the point that whatever you're doing to the house will not damage the collateral, you have the right to do that. You can rent it out. Most of our brothers and sisters outside, they buy some of these properties. They use it for investment as well, and it generates income to help you pay off the mortgage. So that can be done.
And someone can accelerate. If I'm earning a little bit more, or I have an instrument that has matured, or I've sold a property elsewhere, I can top up I can accelerate the mortgage.
Absolutely. So I'll share some data with you here. And people typically take mortgages for 20 years, but the data shows that they pay it off in an average of 7 to 10 years. Hardly do you find someone take a mortgage and they are stuck with a mortgage throughout the 20 years. Now, they're able to do this because they can always pay down on the mortgage. We call it principal reduction. So if you've got an investment that matures up, you can always come and pay down. If you've got some bonus that comes in at the end of the month, you can pay down. If you're a business owner and you get some big contracts and you get some money, you can pay down. So once you do this, you reduce your loan obligation and you get to pay the loan off much earlier. So you take it for 20 years, but in about 7 years, you would have paid off the mortgage and the house is yours.
Interesting. Because also I think I always say you always must have a goal when it comes to finances.
Yeah.
Because when I know that I have that mortgage, then my focus is on it.
Yeah.
So I think
it makes a lot of sense.
And I believe with 20 years, of course, these repayments go lower.
Yes,
so
yes.
It was 2,200 in 15 years. In 20 years, it goes down to.
Yes. So for 20 years, it's $2,000.
Okay.
For the USD, it's just $2,000. So you realize that you've shaved off some $200 from there. And then in the CD for 20 years, It's about 29,000, 28,500 thereabout. Yeah.
So not a big difference, but again, it saves you some amount.
Yeah.
If you really
So
want to.
so again, it's the reason why people would always take the long term.
Yes.
You know, you can decide to take it for 5 years, for 6 years, for 7 years, but the shorter you take it, the more your repayments will be. You know, so it's advisable come in for the 20 years, start with a smaller repayment. Whenever you have money, you can pay down.
If I go to your website, you have maybe a loan amortization table that someone can play with, or it's good to visit one of your branches?
Yes, so I think it's something that where the request has come in recently, so it's something we're going to put up very soon. But it's actually quite easy. You just call any of our lines, First National Bank Ghana, and express that you want to take a mortgage. Like I said, it's not a very simple, straightforward conversation. We do understand. So you'll be assigned someone who will take their time, take you through, you know, the education, do the calculator for you, and show you what the numbers are.
At this point, I think I've understood how you're going to pay the 80%. There's this 20% you mentioned, which was $50,000 or 600,000 Ghana cedi. Probably even that one I don't have. All right, someone doesn't have, and they still want this house.
Yeah.
You know, it's a good investment. It's a place someone would love to bring out their children. You know, you want your children to get out in the morning, ride their bikes in the community. You're not worried. You want them to go and play in the play fields. You're not worried. You want to take a walk in the evening. We do our 5 kilometers, 6 kilometers health walk. You want to do it within a safe environment, and Greenwich Park will give you all that. But still, we don't even have the 600 today. If maybe Petra have some money, I've saved some money there.
Yeah.
How do you take it? Do you look at it as collateral? Do you look at it as deposit? How do you look at it before I go to next? Tell me which amount is that she can expose to George for George to give me.
Okay. I think that some education around pensions will help. So maybe to start with, we're a pensions firm, first of all, Petra Trust. A lot of people hear pensions and they think immediately SNIT, because SNIT is the traditional pensions provider that we've known over the years. And SNIT is, of course, still within the pension space. Currently, we run a 3-tier pension scheme. And so we have Tier 1, Tier 2, and Tier 3. Now, Tier 1 is still managed by SNIT. And then Tier 2 and Tier 3 are managed by pensions trustees like Petra Trust. Now, if you go into the Pensions Act, and it's available online, the Pensions Act 766/2008, there's a provision in there that allows you to be able to use your Tier 2 or your Tier 3 as a collateral to secure a mortgage. So like George was saying, there are rules around taking a mortgage. Typically, a financing partner like a bank would say you need about 20 to 30%, and I think George mentioned that, to be able to show that you are interested, and then they pay off the 80% or the 70% that is remaining. However, because of this provision that the law gives, if you have 10% of the property value in your account and it reduces it further, that 10% can serve as a collateral, which we have partners with various banks. And so once FNB, for instance, comes in, they see that 10% in your Tier 3 account. All that we do is place a lien on that amount. A lien means that you can no longer touch your Tier 3, right? It's because it's serving as a collateral, so you can't come in and then withdraw the funds. However, that serves as a collateral for you. You are able to pay 100% of the property value. Right. And people have been going Tier 3 for more than 10 years, 12 years, and so you would have accumulated some funds in there. And people just withdraw. I think when we started this as Petra, people come in for their monies, and we realized that a lot of people come in with the reasons to buy a house, to pay for my property. And so we decided that this is in the law allows this, so why not explore it? And of course, in partnership with our regulator, that's the National Pensions Regulatory Authority, they allow that, of course, if you have 10% of the property value in your account, then we can use that as a collateral. We connect you to a partner, they are able to pay off 100% of the value of the property for you. So that's basically it. It's as simple as that. Once, of course, the bank will do their own pre-qualification to make sure that you are able to pay on a month-to-month basis. But the Tier 3 is there, so you can use it. And what is even interesting is that in Ghana, your tier 2 cannot be touched until you retire, and that is at age 60. But however, the law also allows you to use your tier 2. And so what we are doing with the regulator now is to find ways where a person can combine both their tier 2 and their tier 3 to increase affordability. Right.
Yeah.
So we need 10% of the value. You were talking about a property that's about 2.5 million. So say you need about 250,000. Say you have 200,000 in your tier 3 and you have 50,000 in your tier 2.
Yeah.
You're able to combine it so that you can increase your affordability. And that makes it much easier for you, because then the bank can then come in and pay 100%. You move in. Remember that if you didn't have your property, you'd be paying rent.
Absolutely.
And all that rent that you were paying can go, exactly, it can go into the monthly repayments of your mortgage that you've taken. So it's a very good thing. And because we are so interested in this, we have partnership with people like IndigoHomes, because you're a trusted partner in the industry. We know that you will not fail our people. We have evidence. I mean, you've seen everything. And so for Petra, we have over 600,000 customers. And I believe some of them are already online and listening to us. We have a website that you can go to. It's homes.petra online. We also do have a mortgage computation calculator in there where you can actually play with values here and there. You know that, okay, I want 1 million. How much can I afford? And of course, affordability is a very big thing when it comes to getting this. And you mentioned that, Anne, when we started this, that you have a 5-year payment plan, right? So there are various options. I think what we are seeing now a lot is people have an investment somewhere. They can use it to pay a portion of their home value. They use a little bit of that amount to secure a mortgage so that they can afford what they are going in for. So there are various options. And that is how Petra comes in to also help in terms of using your pensions to access.
This is so encouraging, because what I hear from this is, if you have your pension, you actually do not necessarily have to withdraw it to expose your retirement in order to own a home. So I can still have my tier 2 and tier 3 secure,
Exactly.
and go to a bank and get 100% mortgage financing, buy my home, and still my pension contribution is secure.
That's absolutely right.
Amazing.
That's absolutely right.
Yeah. And I'll give you a testimony on this, right? Because this is something I have tried myself. So the beautiful thing is, when you don't take your tier 3 and you leave it there, then it keeps growing, because our colleagues at the pension house, they'll keep investing it for you. So unlike you go take it and then you don't have any money at all. So I mean, I have a tier 3 pension under a similar arrangement, and it's there. I check my statements every now and then, and I see growth on the amount. You understand? While you're able to leverage on that,
Still
Exactly.
own asset.
Win-win.
And as Petra uses our tier 2 and tier 3 as collateral, allows us to use it as collateral, I can also buy that house under mortgage as an investment, not necessarily a home.
Right.
An investment.
Yes, I think we have to clarify a bit. Now, when it comes to pensions, there are rules and regulations around it. What the regulator wants is to secure people's retirement.
Yes.
So they wouldn't want, and generally any pension scheme would not want a situation where someone goes on retirement and they don't have anything at all. That is why you can leverage your pensions to get a mortgage to pay for a home. So not necessarily withdrawing. And that's why for tier 2, you cannot withdraw until you go on retirement. Tier 3, you can withdraw. And another good thing about it is there are people who have accumulated funds over a period where in the pensions law, if you take your funds out before the 10th anniversary, you pay a 15% tax to GRA. However, just for owning a home or to secure a mortgage, if you've done 9 years and you have the amount in your account, you can take out that money tax-free. Right, so that's also another option that people have to know. If you have your 2 million in your account and you bring documentation that shows that you have an offer letter from IndigoHomes, you want to take that money out and pay for a home, you don't incur that 15% tax. That is what the law has done for you. But again, if you want to secure a mortgage, you do not have to withdraw the funds. It's just a collateral, it's sitting in the account and it grows. Like you said, you get your monthly statements and you see that your funds are always growing. So if you do a 20-year, like you mentioned, and you are able to pay off within the 7th year, that means that you are free.
Yep.
You have access to the money when you go on retirement, you can take it at any time. And of course, you would have accumulated some gains on that fund. However, the caveat here is that the pensions law says that you can use it for your primary home. And that is what people have to know. So if you want to use your pension funds as your collateral, your primary home does not necessarily mean your first home. You decide what is your primary home. So if today you've seen something at Greenwich Park and you like it and you want to get it, you tell us that this is going to be my primary home. You get us the documentation, we put a lien on it, it's collateral. You can take funds and then you can access your home. So it's as simple as that.
That's very good. So 2 things. Also, what I'm getting from this is I can also withdraw tier 3 to buy property.
You can.
And number 2, if it's being paid straight to the developer, then
Tax-free.
it's tax-free.
Then it's tax-free.
And the third one is we can combine it. My spouse and I can combine our contribution to what
Perfectly. Yes, so to touch on that a bit, if you want to use your pensions, again, I think when George was speaking, he talked about affordability because typically your ability to repay is very important. And per Ghana laws, you have to have at least 50% of that amount. So that means that if your monthly repayment is 20,000, that means that you should earn 40,000. And if that is too high for you and you are married, you can combine with your spouse and then take a joint mortgage to increase affordability, right? So you've seen a 3-bedroom at Greenwich Park, you want to get it. The monthly repayment, I think when you competed, was about 30,000 Ghana cedis, right? And your income is not able to supplement that. You can bring your spouse on board, the two of you together, use your tier 3 as a collateral, get access to the mortgage, and then you pay off. So it's also very possible.
And if I may add, just to highlight the fact that mortgages, we allow for joint mortgages. So, if you think only your income cannot qualify you for the mortgage, like Mavis said, you can combine your incomes. The list of documents that I went through, you just bring the same, as one for the husband, one for the wife, and then we can assess you and then qualify you together and give you a mortgage. So that's allowed.
Well, that's good to know. Now, when you think of pension contribution, we think of employee salary, because then it's mandatory that you contributed in tier 1. Then you do tier 2, and tier 3 is not mandatory, but people opt for it for university. How about the unemployed? If I'm a businessman, can I do a tier 1, 2? Can I do a tier 3 alone? How does that work?
Okay, so per the Ghanaian laws, tier 1 and tier 2 are compulsory. Tier 3 is not compulsory. So if you are a worker in the formal sector, at the end of every month, your employer would contribute a portion of your basic salary. So not your full salary, your basic salary, who missed that? So your employer would contribute 13% of your basic salary, and you as the employee would contribute 5.5% of your basic salary towards your mandatory pensions. So if we add that 13.5 and the 5.5, you get 18.5. Right? Now, out of that 18.5, 13.5 goes to SNIT as your tier 1. And then the remainder, which is 5%, goes to your tier 2. Now, when it comes to tier 3, because it's voluntary, you can do up to 16.5% of your base salary tax-free. The remainder can be done. So what that means is that you can contribute the 16.5%, you enjoy tax savings, but nothing says that you can contribute more. So if you want to do a 30% to a tier 3, it's accepted. However, only 16.5 of that will be tax-free, right? Does that make sense, or should I touch on it again?
Yes.
Great. Now,
so if you're doing 20%, then there is a
3.5 that is
5%
post-tax.
and
Exactly.
16.5
It's pre-tax, right? And that is for formal sector workers. However, if you're in the informal sector and you still want to contribute to a pension, what the law says is that you can do the tier 3. So typically, if you don't have a registered business, because it has to go through payroll and all that, tier 1 and tier 2, you might not be able to do it. However, the law allows you to do a tier 3. Right? You can come in and then have a structure around how you want to do your tier 3. You can sign up on any Petra tier 3 product and have access to it, so you can contribute to it. And then based on that tier 3 that you've accumulated, same applies. You can use that as a collateral, get access to a mortgage. I think George mentioned it for informal sector workers,
Absolutely.
where you have some documentation that you have to send to them for them to know maybe the trajectory of your income. But of course, if you are even in the diaspora, like we're talking about, and you want to have, you're a Ghanaian, and you want to have a pensions account in Ghana, it's acceptable. It's very, very simple.
That's interesting. And when we're talking of the unemployed and they're contributing to tier 3, now with the employed, we're talking of 16.5 because there's a salary, basic salary,
Basic salary.
percentage. For the unemployed, we do not have that same structure.
Not
so
at all.
How much do they contribute?
As much as you want, right? We have various tier 3 products. Because the tier 3 is voluntary, there are different types of tier 3 products. So there are products where you can actually set something like a direct debit because you want to be very disciplined with your investment. So you can set a direct debit and you choose, because it's voluntary. You can decide to contribute 10% of your income, 15%, 20%. It's all dependent on you. You can set up, same with a bank, a standing order where at the end of every month, you see monies going into your account. You also get your monthly statements, your quarterly statements, and you see your investments growing. So there are lots in the informal sector or unemployed that do this. And there are no restrictions around it. You contribute when you want. Of course, we encourage discipline, but there are some people who they have a lump sum. They just put it in there and watch it grow. And from time to time, they come in and then top up. So it's very flexible.
Okay, that's good to hear. That's good to know because we have quite a number of people who are in business, as George
Yep.
said, and maybe they haven't been contributing towards pension or they don't know all these packages that are available for them. And more encouraging is that it can be used as collateral for your home. So I think that's really encouraging. So maybe as we come towards the end to question and answer session, one thing I wanted to ask is, how easy is it to, first of all, how easy is it to access this money if I want to withdraw? Sure. Or if I want to use it as collateral? Just take us through the process. How does someone go through?
Okay, so let's take a typical process where the person has seen what IndigoHomes is doing at Greenwich. They've seen a property that they like. They've seen a 2-bedroom that they like. And they have the full amounts in their tier 3. So we are looking at 2 options. One, the person who has the full amount, and the other person who wants to take a mortgage. So you have a full amount, you have your offer letter from IndigoHomes that says that you want this home at this price. Now we have a very simple withdrawal form that you fill. You grant us your details. On that, we would request bank details from the developer because typically these payments are paid directly to the developer. So we don't pay it to the member to go and pay it to the developer, we pay it directly. So you give us that details. Once we have all that information, it takes 5 days, a week. So 5 working days. We process, we pay directly to the developer. You get your receipt, the developer also has it. It's as simple as that, just 5 days.
So someone hears about this conversation, wants to apply to use their tier 3 to pay a deposit or to use it as collateral.
Sure.
If they apply on Monday, we are talking of next week, Monday, latest, you have provided whatever.
Okay, so in the case where the person is paying directly from the tier 3 to the developer, that takes 5 days.
Okay.
In the case where the member wants to use it as a collateral, it depends on both Petra and the bank.
Absolutely.
Right, there are some requirements that so typically for our customers, when they come through us, we connect them to the bank because we already have a relationship with them. Right, so we do some education, we explain to them what the process is, we send that application to the bank. Once the bank has qualified them, it's a very simple process. I think George can speak about the qualification process.
I was just going to add to that. So if someone wants to take, what we call a pension-backed mortgage, once our colleagues on the pension side confirms, your pension amount, what we will do is there's a form that you would fill to indicate that you agree to pledge it as a collateral, and that will be added to your mortgage application pack, and then we run through the process. So if we'll get in touch with the pension company, Petra here. They will confirm what the balance you have in your pension, and then you will just sign a form to agree to use it as a secondary collateral for the loan, and you're good to go. It's not complicated at all.
Not at all. So we work hand in hand to make sure that that process is as fast as possible. So it's a very simple process.
I see the questions are coming. Quite a number. Quite a number of questions. So, lastly, what are the needs that are around both the mortgages and pension, and especially accessibility, contribution? What needs do we have that people have a perception of?
And I think, I'm sure we've touched on a number of them, but I mean, it's always good to reiterate some of these things. So I think the very first one people normally think of when they hear mortgage is that it's a never-ending debt. You know, I know culturally we don't like debt.
Yes.
You know, but like I mentioned, typically people come in, take the mortgage for 20 years, but the data shows that no one gets stuck with a mortgage for 20 years. You understand? I mean, between 7 to 10 years, people pay. So the first myth that people have is that it's a never-ending, debt.
Yes.
If we're going to do one thing this afternoon, is to tell people that, it's discipline. Once you factor the repayment into your expenditure, it becomes part of you, and you can always pay down. We like to do things on the side, get some extra income on the side, get some bonus. You can always use that to pay down. I think the second one is that, and I'm happy that our conversation this afternoon has touched on it on multiple parts. Mortgages are not just for salaried workers.
Yes.
Typically, people think that mortgages are for people in formal employment. It is not. And I was smiling when Mavis mentioned that even people who are not in formal employment, can do tier 3.
Yes.
So if you've been doing your voluntary tier 3, you can still leverage on that and take a mortgage. And those of us on the mortgage side, we also do not restrict you when you come. We sit down, help you structure your business, understand your business, the inflows, the outflows, and then we can do a mortgage for you. The third one is that people normally think that renting is cheaper and mortgages are expensive.
Yes.
And I know it's a tricky one, but I'll touch on it. So, of course, on the face, it would appear that rent is cheaper. So if I've got a 2-bedroom, 3-bedroom house, and I'm probably paying $3,000, $4,000 every month, plus maybe if you want to take a mortgage, you probably would be paying, maybe some $9,000, $10,000. On the face, you think that mortgage is expensive, but guess what? You're building equity when you pay mortgage. You can stay in that house, pay rent for 10 years, and if you have to leave, you don't have anything. But if you pay mortgage for 10 years, you have built equity. The property is yours. And for most people who end up paying their mortgages early, they even come back, refinance, take the equity, and use it for something else. Exactly. So that's the third one. On the face, it might appear that rent is cheaper, but trust me, if you take the mortgage, you build equity in the property, and that equity is yours. You can always unlock that into cash in the future. So that's the third one. And I guess the last one is that. And I say this because I have relatives out there. When you live in the diaspora, you have credits. You have one form of loan or the other, or even here, people think that because they have an existing loan, they can't access a mortgage. It's actually the reverse. We actually like people, that we can assess their credit history. It's the reason why I mentioned that for our brothers and sisters in the diaspora, we would ask for a credit report. So once we see that there's an American Express card somewhere, a bank card, or even a mortgage out there, it demonstrates that you have a certain credit history. And even if you have not paid off the existing debt, once we do the qualification, we factor that in our calculation. So I think that's the last myth. If you have an existing debt obligation, it does not shut you out of the mortgage door. You can still come, we'll have the conversation, and we'll see how we structure it.
And I think I agree to what you're saying, because sometimes you might think that it's a lot of money that I'm paying to the bank. But I'll give you an example. A 3-bed
Right.
before April.
Mm.
All right.
Mm.
Actually, let's start when we began. When we launched Greenwich Park last
Right.
year, we gave a 3-bed at $216,000.
Mm-hmm.
Okay. This then went up to $225,000.
Mm.
Today, that 3-bed is going for $237,000. So you might say that, let me save the money. When I save enough, I'll buy. But guess what? The property is escalating as we move along.
Yeah.
So the amount you thought you'd be saving last year, which is 216, today it's gone up to 237, and maybe 5 years to come, it could be 280.
Much more.
So the bank helps you to secure your property at a good price immediately, all right, and you're able to pay it over time.
And let me. You're spot on. I like to use a personal experience when explaining this, because the generations before us, our parents and their parents, and I recall, typically they buy land and then they start building. My dad used to take us to his project site, and we were going, and by the time they are done building, because once you're building, you're paying rent, you're paying school fees, you're paying all of other obligations. So it takes you about 15 years, And I remember by the time we finished and we moved into our house, my older cousins and siblings had left. I was about to go to secondary school, and a house that had been planned like 3-4 bedroom for a whole lot of people. It was just my parents stuck in there. Of course, at the time we didn't have mortgages readily available. If you do have a mortgage, you can save that. Go in now, whilst you service it, you live in the house with your family and all of that. You build the equity. If the kids live in the future, you can sell off the property, downsize it, and take the equity as cash for yourself.
But the family will have enjoyed the house.
Exactly.
The dream you had 15 years ago.
Exactly.
The children can enjoy it for 15 years as you pay.
Yeah.
Right?
So that's how it works.
That's good to know. Amazing. What are the
I'll just talk about one myth, but we've covered a lot, and that is around pensions. Typical Ghanaian mentality is pensions is for 60. So what we see is that they don't engage. They don't want any talk about pensions, especially when they hear tier 2 where you can only access at 60. They don't want to hear anything about it. But with all this education going on, that just like George said, you can use your tier 2 and your tier 3, secure a home, live in it, and then you can do your monthly repayment, just like you would pay a rent. Add a bit more, and then you have the property for yourself. So please engage with the pension. There's so much you can do with your pensions. The law allows us to expand in so many ways, and we are exploring it as we go along. So engage, try and be interested in your pension. And you see, for a home ownership like this, it will be very easy for you. 100% payments through the bank. You are in your property, you enjoy.
That's good to know. Do you have any practical example? Say I'm earning 15,000 like this, and I'm looking at a 2-bed unit, which is about 1.9 million. I've saved for 9 years. Just take me through. Maybe we're a couple. Just take us through what it will take for us to really. I don't know whether you have some calculated examples that you can give us.
Not necessarily, but I'll just give some statistics around this. I think the pensions, when we are around about 15 years since we started this 3-tier pension scheme. And so at the 10th year, we tried to conduct an analysis to understand, because there was a previous pensions regime and there's a new one. People wanted to try and ascertain whether the old one was better, because in the old pensions regime, we had one maybe organization providing your monthly pension repayments and then your lump sum. Now that has been separated. So you need to do your monthly payments and then you get your lump sum from Petra Trust or a trustee like Petra Trust. And when we did the analysis, we realized that this was so much better for people who had contributed, say, 10,000 cedis, and I'm using small value so that we understand. After the 10th year, they had more than tripled their investments. So pensions are usually compounding. The interests are compounding. So if you come in with 10,000 today, tomorrow you have 10,100 cedis. The next day, you are investing that whole 10,100 cedis, and so it compounds. So we realized that after the 10th year, when you take your statements, you might have contributed 10,000, but your interest on it is 20,000. right? And so that gave people courage that's okay, this is something good. And if you're investing with your partner and you're bringing your funds together, that more than increases your affordability. Like we said, for you to get a mortgage, you need only 10% of the property value. So what some people do is they withdraw a bit of it, pay a portion. So let's say you and your partner together have 500,000 for a property that is 2 million. That means you need just about 200,000. To increase affordability, they can withdraw 300,000, pay a portion, and then secure the mortgage with just the 200,000. And so it's very important that you continue with the pensions. And one thing that we also advise people is do not just withdraw. Like the people say, going to pay for something and you just withdraw, because there are lots of advantages to this pension than just withdrawing. People see it as because it's tier 3, you can withdraw at any time. I'll come in and withdraw whenever I want.
Yeah.
But if you did that, remember that you would not have that 10% that you need for a bank to pay off 100% of your property for you. So we advise that let it compound, let it grow, and take advantage of these value-added services that the tier 3 provides.
Great. That's good to know. Thanks for that. So we go to question and answer. We have a few questions. The first one is with regards to the bank and age.
Yeah.
Why is age a factor? So then someone feels like, look, why I've come in at 40, 50? Why is age an issue?
Yeah, no, thanks. I mean, as expected. So, like I mentioned, the primary metric is your ability to repay the money that we have given to you, right? And how do you repay this? It's through your work. So, like I mentioned, if you're a salaried worker and you live in Ghana, the retirement age is 60.
Okay.
And so, if you come in at age 40, you can take the full 20 years because, in 20 years time, you'll be 60.
Yeah.
It doesn't shut you out. It only means that if you're 50 and you come in, we would assess your repayment based on a 10-year stretch because, by 10 years, you would have gone on retirement. However, let me also add that we've had several occasions where based on the person's work that they do, they don't go on retirement at age 60.
Yeah.
And some people even have contracts. We've had the occasions of people in the judiciary, some, people in the academia and all of that. So it is based on the structure of, the work you do. And I also mentioned that for people who are in business, it doesn't necessarily apply because if you've built a very well-structured business, and we look at your financials and, typically the business will go beyond you, then that doesn't apply because even beyond 60, you'll still be running your business, And I think the last one that I'll mention is that it differs from, jurisdiction to jurisdiction. So in the US, the pension age is different, so we won't say because it's 60 in Ghana, you're coming from the US, it has to be 60. No, it doesn't work. But it's key that, we consider age because beyond a certain age, the reality is you just won't be able to earn a certain income to pay off your loan. Okay. So that's why we consider it.
Great. The second question is about how you calculate your monthly payment. How do you calculate your monthly payment based on interest rate? Is it simple interest, prepayment? What's the prepayment? What's the penalty?
Okay. Yeah, I think I
understand where
I think I understand where we're going.
Great. Okay.
So I think the first one is how we calculate the repayment.
Yeah. So
obviously there's an interest rate that applies. There's an interest rate for CD. There's an interest rate for the dollar. So you would get an interest rate. The thing about interest rates is it is not a one interest rate for all. Maybe when I was talking about the myth, that was one of the things that I should have said. So typically, we assess people's credit worthiness. So if Mavis and yourself walk into the bank, the fact that you're buying from IndigoHomes doesn't mean that you have the same credit profile. So Mavis might end up with say 11%, and then you might end up with say 11.1. So it sort of differs. But at the end of the day, there would be a certain interest rate. The interest rate is applied on the loan amount,
Okay.
and it's amortized. So once it's amortized, then there's a monthly repayment. I'm being dragged into the technical part, but let me go there and stay there.
Yes.
So when you pay the monthly repayments, a part of the repayment goes to reduce the principal,
Yes.
and a part goes to service the interest.
Correct.
So when you take the typical amortization schedule, the more you pay, the more your repayment, your principal amount reduces. So if you come in and you take, say, 200,000 in the beginning, you make, $2,000 or $3,000, like we mentioned. In the beginning, a good part will go towards your interest, and a part will go towards your principal. But the more you pay, you start reducing the principal. Yeah. And I think the second question I had is the prepayment, whether there are prepayment penalties.
Yes.
Yeah, there are some prepayment penalties.
What does prepayment penalty mean?
Okay, so normally prepayment generally is paying down on your loan. Okay, so
when you get a little bit more
exactly, and then you pay down on your loan. So and when we started this, the prepayment penalty used to be huge, but the central bank came in, and has regulated the space. So there are some prepayment penalties that apply, when you come in, to pay down. It's normally applied on the amount you're paying down, and it's very minimal.
Okay, great. Maybe it's a question maybe across pension, and the question is the tier 3 utilization, or how we can access our tier 3. The package we have, is it exclusive to Petra, or if someone else's employer is dealing with another pension manager, probably there's something similar going on. Is it from the regulatory, or is it a product of Petra?
Okay, so this is in the Pensions Act.
Yes.
It's something that the pensions law allows.
Okay.
However, I think that within the industry, Petra has come up with a product called Home products, and we've engaged the regulator extensively on how to operationalize this. So you might be saving with another trustee. It's a possibility, but they might not have operationalized it yet.
Okay.
They might need to talk to the regulator and get some approval here and there, and then begin it.
Okay.
But if you save with Petra, we've already done a lot of that work already. And as I mentioned, even for the tier 2, we are onboarding that as well, so that people can use their tier 2. Okay. So it depends on where you save. It's in the law, so it's acceptable, but it depends on if they've operationalized it.
Okay. All right. I think that's very well answered. Thank you for that. Then the other question is about joint mortgages. Does it only apply to spouses?
Yeah, so
that's interesting.
it's a bit of, so again, generally the mortgage market in Ghana is still a developing one.
Yes.
We've had occasions to always try some of these things. Currently we limit it to spouses. I think in the past it was allowed to be done among siblings and things like that, but we operate as a bank, and we are always under regulation from the central bank. So to the point where the Borrowers and Lenders Act, allows us to do, we go with that. But currently, the simple answer is yes. It's limited to spouses.
Yeah. So if we are business partners, we can't take a mortgage together.
No.
Okay, that's good to know. The other question, there's someone who says that they have a very long question. I don't know if we can unmute them to ask the question, and I'm not sure we'll hear them from this. So I think Nelson Kwesi will have to read out that question for us. There's someone who needed to ask a question, and it was rather long. Are we able to get them, Kwesi?
Yeah.
Okay, if we get them, then you can just take the question for us. They wanted to ask, because they said the question was quite long. Can one take a loan on just the 20 or 25% of the required deposit? I think, what do they mean? Can one take a loan on just the 20 or 25% required deposit? Or can you take for more? I think if you have more deposit, you can still take a mortgage.
Yeah, absolutely.
But if you have 10%, do you finance? I hear with the Petra package where you have the tier 2 and tier 3, and you want to use it as collateral, it's just a requirement of 10%.
Yeah. And even that,
and the bank will finance 100%.
Exactly.
Now, if I have 10% in my bank account, would you finance 90?
Yeah, once. So typically we would do an 80-20 or a 70-30.
Okay.
But once you bring in the pensions bit, if you want us to do 100%, we can do that. If you want us to do 90% because you're bringing in the pensions and you probably want to pay, something from your savings, that is also an option. That can be done as well.
Okay, that's good to know. The other question is quite long. I'll read it.
Yeah.
What is the minimum deposit required for your mortgage product? Does it differ from diaspora buyers? And do you offer 100% mortgages or products that can reduce the upfront deposit? Do you assess affordability? For someone earning outside Ghana? I think we answered this, and it's pretty straightforward. I think the only thing you need from diaspora, of course, they need to prove their income, source of income, and then they need the credit. What did you call it? The credit report. The credit report, and the rest of the documents are very similar to them. So your passport.
But again, just to rehash it and say maybe the person joined. We do mortgages for people who live outside. If you're a non-resident Ghanaian, it doesn't matter where you live. Once you have some form of income, we are more than happy. You'll be amazed at the number of transactions we do for people living in the diaspora.
Okay.
You'll actually be amazed. So we do that. The only thing is, if you live in the diaspora and you don't have a pension to leverage on and pick the 100%, then you need to come in with some form of deposit.
Okay.
But and I think I heard Mavis say earlier on, there are people who live in the diaspora and have subscribed to the tier 3, and so if they build some savings in the tier 3 and they want to leverage that, definitely we can look at doing that.
A lot of questions from diaspora. I'll just read, and I think what we will do is if we can just paste the requirements on the messages in Zoom, because all that list of the documents required, we have it. We can just paste on the Zoom link so that anyone on Zoom can just access that document. We can also paste it on our social media platforms for anyone who would want to know the list of documents, because it's coming a lot from diaspora. In fact, someone asked if you accept euros, USD, pounds, how you calculate the exchange rate risk. And as we said, if you don't have a Ghana card, you can use a passport as well.
Oh, absolutely.
So I'll comment that one about how you calculate the exchange risk with another question that what are your current interest rates for diaspora mortgages? Are they fixed or variable? Do you offer interest-only periods or flexible prepayment options? And do the penalties apply for repayment or refinancing?
Okay.
Quite a bit.
So first of all, the interest rates are variable. So like I mentioned, we do offer both local currency mortgages and foreign currency mortgage. So depending on where you're based in the diaspora, if you want to take a USD mortgage, you can do that. If you want to take a euro mortgage, you can do that. If you want to take a pound mortgage, you can do that.
Okay.
If you want to take a CD mortgage, you can do that. So if you take a CD mortgage, what's going to happen is your repayment, of course, is in CD.
Okay.
And so anytime you need to remit money to pay your repayment, you just factor, the going exchange rate, to pay the CD equivalent. But if you live in the US and you take a dollar mortgage and you have to pay $3,000 every month, you just pay it into your account or remit it into your account, and then it will be applied.
Okay.
So that is one. And I think there was a second one about
the calculation. Is it the exchange risk? The exchange rate risk.
Yeah.
How you calculate that?
So if you take the same currency mortgage, then you don't really have an exchange rate risk, of course. But if you live in the diaspora, you want to take a CD mortgage, then the only bit is when the CD strengthens against your home-based currency, then that is where you have an exchange risk. We actually don't see a lot of that on the market, but we always pray that the city stabilizes. So that's about it. Of course, if the city appreciates, then you need to show up and make sure that at the end of the day your repayment is there. And I think I touched on that earlier on. The interest rate is variable. So if you take the CD mortgage, it's pegged to what we call the Ghana reference rate. So it's sort of a base yardstick that the Bank of Ghana gives for banks to on-lend. So there's always the Ghana reference rate plus the margin. And I think I spoke about the margin earlier on based on your credit profile. A margin might apply. So normally GRR, which currently is around, I think 10 or 11%,
10, 11,
plus the margin. So you're likely to end up at say 14, 13% if you take the CD. If you take the dollar mortgage, the dollar, it's variable, but it doesn't move up and down like the CD does, because normally the indexing rates are just quite stable. So with dollar, you are looking at currently somewhere about 11%.
And I must say this has been the best interest rates we've seen in Ghana for a long time.
I tell you, at least I've been doing mortgages for 10 plus years, and I remember a time where CD rates were about 32%.
32, yes, that was like 2-3 years ago. We were at 32%. So actually, this is the best time ever to enjoy a mortgage, and really, it's been very stable for a while. Because since we started selling Greenwich Park a year ago, it's been the interest rates have been the same, which is
even on the dollar mortgages, people used to. We used to give, the rates were like 14, 15%, and all of that. But things
now they're 10, 11, at 11%. That's good. And then someone else asked, and I think we will do an e-short after this about the requirements of the mortgage, and because there's a lot being asked about legal fees, valuation fees, processing fees, insurance taxes. What are all the other costs that come with mortgages? Maybe you can give us a quick.
So there's an application fee that you would pay as part of your mortgage application. Now the fees come in play because we need to do due diligence on the property that you're buying. So for people who want to buy a property from IndigoHomes, we know that IndigoHomes, we know you always have land title certificate, so we can sort of sleep. But if it's coming from somewhere else, we'll do a due diligence. And this involves going to the Lands Commission to conduct searches. And these are searches that we'll pay on your behalf. So it's factored in the application fee. Also, as part of the application process, we'll do a valuation on the property. We need to ascertain that the actual value of the property is what it is. In a bit of education, property price is not always the same as property value.
Yes.
You understand?
Yes, very true.
Once we're giving you a loan and the property you're buying is collateral for the loan, we need to make sure the value is intact. So we would conduct a valuation, for you. So these are the things, the cost of these things are part of the application fee. The third one, and especially for our brothers and sisters in the diaspora, one advantage of taking a mortgage is that you get a bank to handle the registration, the title registration for you. Again, I mentioned the property will be collateral. And so when we pay for the property, we will take the indentures and the barcoded side plans, of course, in your name, in the customer's name, and then we would ask the customer to pay, an amount towards registration. And we have an in-house team that will go to the Lands Commission and perfect the title for you. So these three things make up what will be charged as part of the application fee. So normally it's a percentage of, the loan amount. It's a percentage of the loan amount. So depending on the property you're buying, and all of that. On the requirements, that I know we would always get lots of questions. So I think what I'll summarize it by saying that always reach out to us at First National Bank.
Correct. Yes.
Reach out to us at First National Bank. Just pick any of our numbers and call and say, you want to speak to someone about a mortgage.
Yeah.
It's always a conversation, a moving conversation.
Okay.
So we always want to take our time, assign someone to you,
Mm.
engage you, take you through the requirements, explain, and all of that.
Great.
So we are ready to take up more questions.
Thank
You're
you.
welcome.
Thank you for that. Thank you so much. So, quite a number of questions about IndigoHomes.
Yeah, because you're asking a question, so yeah,
Yes.
you need some.
Yes. So, what's our track record? What's IndigoHomes' track record, and how long have we been operating for? So, IndigoHomes is owned by Black Ivy, an American investment company. We were founded in 2016, and we have done 2 successful developments. One is where we are today, which is Oyarifa Park. We started off with Mensa Park, which was launched in 2016, and we completed in 2019. Those are 200 houses. Then we came to Oyarifa Park, which we started building in 2019 and finished in 2024. A beautiful 15-acre piece of land that now houses 200 homes. And now we've moved on to houses. All of them are townhouses, 2, 3, and 4 bedrooms. In a gated community, as you can see on the screen, with lots of green spaces. It's the greenest community in the city. In terms of warranties, that came again. What warranties or guarantees come up with the we'll actually get a contractor to develop the community, but we develop ourselves. Therefore, if you have an issue with your home, our team will always come in. And we have a warranty customer relationship office in the community through the warranty period. So you just walk into our office within the community, and we come and see what concerns you may be having about your home. Then the other question that has come up is, do you offer payment plans before mortgage approval? How flexible are they? Can buyers switch between payment plan to mortgage later without penalties? The answer to all these questions is yes. With the mortgage, I'll put a small asterisk because I'll explain that further. We give up to 5 years payment plan for Greenwich Park, because again, if you're buying now, you're buying very early on into the development, which helps in 2 ways. You get a very long payment plan, and also you get very attractive prices, because as you can see, the prices escalate over time. So we'll give you a payment plan, and we'll calculate that with you. Unlike the bank, which does the amortization, for us, we sit down and work the payment plan together, and there's no interest applied to that. If you'd like to take a mortgage later, and you want to say you're taking a house that will be ready in 2 years, and you want to do a mortgage, however, you want to slowly pay and see where you'll be at the point where your house is ready, and then take a mortgage, it's still acceptable, in that right now we will use a bank facility letter to take you on as a mortgage client, but you pay slowly. And at the point where we are handing over, the house is ready for handover, the bank will check that you are to take 80% of the financing, but you've been able to pay and you only need 60%. That is very possible. And similarly, if you want to switch from installment plan and then you want to take a mortgage, again, that's doable. The small interest will be applied if you haven't done at least 50% of your repayment. If you're below 50%, then there will be a small amount that will be added on to your house purchase amount, and then we can always work with the bank to get you financing. Do we offer assistance in renting? Yes, we do. For diaspora buyers, yes, we do. We have very trusted agents that we work with, and they'll support you to rent and to manage your home. So whether you're doing short-term or long-term rental, we have a support system for our diaspora buyers, or even for our resident buyers who are busy and they would want support in managing the property. And with the community, we have a property management company that manages the community. And that's why when you drove in today, it doesn't look like we haven't been here for 2 years.
Yeah.
You know, we handed over this community 2 years ago. The roads are good.
Yeah, absolutely.
The lawns are very well manicured. Yeah, they are clean.
Yeah.
You know, the street lights are working. And because we have a property management company to take care of the community, to ensure that years to come, what we promise our homeowners, they're still enjoying it. If I decide to sell a property later, does IndigoHomes assist with the resale? How has property value appreciated in your development over the past 5 to 10 years? Interesting. Interesting. We have, what we do is when we get to 70%, we create a homeowners platform, homeowners association, and therefore you're together and you can always share on if you want to sell your house. We have some agents that we can introduce you to as well if you want to sell your house, and they'll support you through that process. How has the property appreciated? Actually, it's very interesting. When we started selling Oyarifa Park, which was 2019, a 3-bed townhouse was going for $198,000. By the time we were leaving, this house was going for and today it's going for $240,000. So you're seeing an appreciation over $65,000 over a period of just 5 years. And that is being seen even today when we look at Greenwich Park. We started selling the 2-bed at 216. Right now it's already at 237. That's an appreciation of about $20,000 with less than a year. So this is an asset which you buy and you're sure it's going to grow in value over time. Yeah, so I've wrapped through all that. There's a lot of questions about mortgage. We had promised we were going to be here for exactly 1 hour, 30 minutes. And so I'll take just one last question, which is, can we use a bank in the US? Someone is in the US. Can they use a bank in Ghana, or do they have to use their bank in the US? I guess for mortgages, I think they'll have to use a bank which is you have to use a bank here.
The bank in Ghana.
A bank in the US, I don't think will give you mortgage for a property in Ghana, so you'd need to use a bank here. All right, so I think that's the last question. I think this will be a burning question. What are the most common mistakes diaspora buyers make, and how can they avoid them? And what support do we support after purchase? I think, and that's for us, the developer. I think one of the mistakes that diaspora buyers do is not doing due diligence before purchasing a home. I love the fact that after the year of return, Ghana became really popular with the migration, with the African Americans coming home because it's their home. We have a lot of diasporians who felt they needed to come back home and really invest, which is great. And so much information started coming up on our social media platforms, and everyone is advertising one thing or the other. But I think one of the most common mistakes with diaspora is not doing due diligence and just understanding what needs to be checked before you invest in a property, may it be land, may it be a home. For me, that's the biggest mistake. And how you can do this is either work with a trusted developer like IndigoHomes. We've been here for, it's going to be 10 years this year. And we've had 2 successful developments and doing our 3rd. So you can be sure that we've been tried and tested and we know exactly what we are doing when it comes to real estate development. The other thing is maybe you can get a lawyer locally who can help you do your due diligence and make sure that all documentation is in place for whatever property you want to buy. I think that's something else that George has said is if you get a mortgage, then they do all the due diligence because they're not going to release money to a property which doesn't tick all the boxes.
Absolutely.
So with a mortgage, again, at least you're sure the bank has done due diligence for that property in order for them to approve for you to take a mortgage against it. So I think for me, that's, unless you know any other mistake that diasporians do.
Yeah, I think you're spot on. I mean, a plethora of diasporans come to us because they believe we'll do the due diligence on their behalf,
Correct.
You know, which we actually do. So yeah, I think you're spot on that.
Yeah, great. So thank you so much. I think any last words before we close?
Yeah, I mean, so for me, I think the time for home ownership is now. You know, a decade ago, mortgages were not popular. Interest rates, you know, up through the roof. We didn't have pensions to leverage on. Now, and even a decade ago, we didn't have, you know, so many beautiful developments like we do have now. Now, interest rates are much better. You get to increase your affordability by leveraging on pensions, you know, and take 100% mortgage. So I think for me as a mortgage provider, the word out there is if there's a time to consider home ownership, using a mortgage, this is the time. This is the time, and to say that don't think it is not meant for you. Mortgages are meant for everyone.
Okay.
Just come to us at First National Bank, give us a call, go to any of our branches, go on the website and send us an email, and we'll reach out to you. We will carefully sit down with you and come up with a mortgage solution for you.
Great. Amazing.
Yes, I think just to piggyback off what you mentioned, right now there's a lot of information available. There's a lot that you can do. You can give Petra a call as well. We have IndigoHomes as partners. We can walk you through everything. Of course, we also do our due diligence. Otherwise, we wouldn't be sitting here today.
Yes.
You can also visit homes.petraonline.com.
Okay.
You can have access to various calculators, just play around and know your possible mortgage repayments. There's a lot of information out there. So we want to encourage everyone that just engage, talk to us, and then we'll be able to help you along this home ownership journey.
Thank you. I think the key word is engage, engage. Come and ask all the questions. We are ready to answer them. If it's just a dream you want on paper, we are ready to help you do that. And you can actually actualize it. The first thing is just take that step and ask. Thank you so much for your time. I really appreciate the wealth of knowledge you've given to our listeners today and the people online who are just listening on how to buy property and grow their wealth and grow their assets. From IndigoHomes, we are so grateful. I've seen so many of our homeowners online just cheering us. Thank you so much. Prospective buyers who we are already in talks with, thank you for finding time to be with us. And for those who haven't contacted us yet, please, our lines are open, our WhatsApp numbers, our team is waiting to answer all your questions. Talk to us, write to us, and we look forward to you all being our homeowners very soon. Have a great day, and thank you.
Thank you.
Thank you for having us.
Thank you so much.
Yes, so that's it. Yeah.
It is fantastic to see all of you. I do really want to say that it is an incredible pleasure to be here. It's an incredible opportunity to be able to meet each of you. And it's also incredible from my perspective. It's been almost 10 years to see some of the same names that helped us start this journey. So I want to start by saying today is really about keeping promises. The promise to deliver a community where people love where they live. And it was truly amazing to see you today and be reminded of how far we have come and how many of you have helped us get there and how many of you are going to be helping us get to the next phase of our development. So I want to start with first saying thank you. Thank you to our construction teams. Thank you to our cost estimators. Thank you to our subcontractors. Thank you to the IndigoHomes team. Thank you to our sales partners. Thank you to all of you. This right here behind us is does that mimic this exact layout?
Yes.
Okay.
Yeah.
And that has been our promise, the promise of quality and consistency, and that you can trust us to deliver the vision that we put on the billboard. That's what your home's gonna look like. That's what your community's gonna look like. And you are how we do that. Because in the end, our homeowners aren't buying houses. They're buying our promise. They're buying our word. They're buying our commitment to a community where they can raise their families and get up every day loving it. At Black Ivy, we're committed to endeavors that matter in people's lives. We build businesses in food, housing, healthcare, logistics. Why? Because those matter. They matter in people's lives. So Greenwich Park is the next bar. Well, I am on the site of Greenwich Park, and I am so excited for what Greenwich Park is going to mean for our new homeowners and buyers. But I want to say something to all of you who have bought homes at Iamensa Park and at Oyarha Park. I want to say thank you for the trust that you put in us, for helping us achieve the kind of quality and the kind of consistency and the kind of partnership that has allowed us to be in a place where we are now launching our third and largest development. And in that development, we will continue to remain committed to the promise of delivering homes where our residents love to live, where the quality of our finishes, the contributions of the green spaces, and the opportunity for families to grow is always at the center of what we do. So thank you. Thank you for believing in us, and I hope you will come and see what we are building at Greenwich Park. Greenwich Park is going to be our largest development in Accra for IndigoHomes that we have built. 270 homes, an even larger green space, a commitment to finishes and quality that is built on 2 developments that we have had the opportunity to both grow and learn, but more particularly deliver excellence in. And so in many ways, the opportunity to love where you live will, I think, be at its zenith. We are striving for impeccability. We also are striving for the kind of partnership with those who choose to buy our homes where we stand behind them. We have a 3-year warranty. And so when things are not as perfect as we would want or as you want, we make sure that we're there for the first 3 years to ensure your home meets all the standards that you had the expectation for and that we did too. So Greenwich Park is going to be a fulfillment of that promise. And we are already getting started. We're in our first phase. We have homeowners that will be able to move in on the first half of next year, and we can't wait for what Greenwich Park will mean to the greater Accra area. We have been building here in Ghana since 2015, with our first development starting and launching in 2016. Over the past 10 years, we've had an opportunity to learn a lot. And in learning those lessons, some of those lessons were around what does it mean to actually create a community that's centered around a green space? What does it mean to be able to ensure the level of quality and consistency? What does it mean to be able to develop homes using Forza construction, which meant we had to actually bring in teams from outside the country to help actually train our team members and the workers with which we worked. And now today, we have a cadre of Ghanaians who are delivering our homes with the technique and talent that they actually learned at Iamensa. So in many ways, our lessons learned has meant that we've had to do a lot of things to make sure that our quality remained consistent. And sometimes that meant We had to correct mistakes that we've made to be in a place where the next development and the next homeowner never had to go through the first set of challenges. They actually got the benefit of that we actually achieved. But I want to thank everyone at IAMensa, at OYARFA, and for those of you who are now coming to Greenwich Park, because the lessons that we have learned has meant that we can deliver an impeccable development and one where everyone will love to live. At IndigoHomes, we are committed to keeping our promise. And our promise is a community in which you will love to live. Our promise is one of quality, one of trust, and one of consistency. Our promise is that should something not be up to our standards, not only will we fix it, we will ensure that it is meeting your standards. Because in the end, we want you to love where you live. Well, I am on the site of Greenwich Park, and I am so excited for what Greenwich Park is going to mean for our new homeowners and buyers. But I want to say something to all of you who have bought homes at IAMensa Park and at OYARFA Park. I want to say thank you for the trust that you put in us, for helping us achieve the kind of quality and the kind of consistency and the kind of partnership that has allowed us to be in a place where we are now launching our third and largest development. And in that development, we will continue to remain committed to the promise of delivering homes where our residents love to live, where the quality of our finishes, the contributions of the green spaces, and the opportunity for families to grow is always at the center of what we do. So thank you. Thank you for believing in us, and I hope you will come and see what we are building at Greenwich Park. Greenwich Park is going to be our largest development in Accra for IndigoHomes that we have built. 270 homes, an even larger green space, a commitment to finishes and quality that is built on 2 developments that we have had the opportunity to both grow and learn, but more particularly deliver excellence in. And so in many ways, the opportunity to love where you live will, I think, be at its zenith. We are striving for impeccability. We also are striving for the kind of partnership with those who choose to buy our homes where we stand behind them. We have a 3-year warranty. And so when things are not as perfect as we would want or as you want, we make sure that we're there for the first 3 years to ensure your home meets all the standards that you had the expectation for and that we did too. So Greenwich Park is going to be a fulfillment of that promise. And we are already getting started. We're in our first phase. We have homeowners that will be able to move in on the first half of next year, and we can't wait for what Greenwich Park will mean to the greater Accra area. We have been building here in Ghana since 2015, with our first development starting and launching in 2016. Over the past 10 years, we've had an opportunity to learn a lot. And in learning those lessons, some of those lessons were around what does it mean to actually create a community that's centered around a green space? What does it mean to be able to ensure the level of quality and consistency? What does it mean to be able to develop homes using Forza construction, which meant we had to actually bring in teams from outside the country to help actually train our team members and the workers with which we worked. And now today, we have a cadre of Ghanaians who are delivering our homes with the technique and talent that they actually learned at IAMensa. So in many ways, our lessons learned has meant that we've had to do a lot of things to make sure that our quality remained consistent. And sometimes that meant we had to correct mistakes that we've made to be in a place where the next development and the next homeowner never had to go through the first set of challenges. They actually got the benefit of that.